In this video, we're gonna see the Elliott Waves theory and why most of the traders are using this type of technical analysis. And after that, we're gonna see a practical example of Bitcoin and how you can use Elliott Waves theory there. Hi there, it's your daily trading coach, the channel that will help you improve your trading skills and skyrocket your returns. Okay, guys, what you can see here is basically what Elliott Waves theory is all about. And we will go a little bit deeper in who actually have created it and what his expectations were when he actually find out about this theory. Let's see why most of the traders are basically trying to use Elliott Waves. Elliott Waves theory is made by impulsive waves, which is wave number 3 and wave number 5, and of corrective waves, as you can see, which is wave number 2 and wave number 4. As I said already, that this gives you a great risk-reward opportunity, and this is why most of the famous traders are using it. And when I'm saying one of the famous guys, I mean that, for example, Paul Tudor Jones is basically he's really passionate about this theory. But who actually created Elliott waves? As you can say by the name of the theory, the creator of this method is Ralph Nelson Elliot. He's an accountant for more of his life, and he is born in 1871 in Central America. After 25 years as an accountant, Elliot got sick and he had to quit his job. He's 63 back then, and while staying at home, he got excited and interested about the markets and how they work. So he started trying his theories and backtesting on Dow Jones back then, which got him to create this theory. He has a lot of followers, and most of his work is basically published by his students. Just because Eliot dies before he manages to publish his book, and because at the end of his life his thoughts were really random, and the last part of his writings are really going from place to place without actually see what his real idea was. Okay, guys, let's see the picture a little bit better, and we can explain every ways from here. And after that, we can see the real deal and how this technical analysis is actually applied to Bitcoin. So the first wave is basically where the key traders and the pros go long and cover short positions. And after that, we have the second wave, which is the correction wave. And after that, we have probably the most significant one, which is the third one. And as we said already, the third and the fifth one are impulsive waves. So basically, when you try to go into a trade, you have to try to catch them. So the third one is probably the most significant one. And this is the one that you have to try to catch. Here is where most of the pros and institutions are going in to trade, and you are gonna be with you're gonna be faced with great risk reward ratio when you try to catch that. After the third wave, we have one more, which is basically the another correction wave, which is the fourth one, and after that we have the fifth one, which is the second impulsive wave. After that, we have more waves, which are actually the changes of the direction of the trend. And this is where actually most of the investors are selling or they are trying to make a short positions for. And you can see that they are actually described with A, B, or C. You can see more detailed description about the waves where on every wave there is a subwaves with numbers which are basically describing the small waves inside of the bigger ones. So I think that they are probably a little bit overkill, just because in this description here you can catch the real and the big moves, and you can have a great risk to reward ratio, which is basically the idea of trading. By the way, we have to mention here that there are specific rules by which you have to build your Elliott waves analysis. And there are, again, a few options for that, but my favorite one is by creating a Fibonacci levels. So what you have to know here for the relation between Elliott Wave Theory and the Fibonacci levels. So let's open a notepad and see what are the rules for Elliott Wave Theory and the Fibonacci. The first part is that wave 2 should be around 50% till 85.4% of wave 1. Next rule is that wave 3 should be 161.8% of wave 1. The third rule is that wave 4 should be around 14.6% of Fibonacci and 38.2% of it, of wave 3. And the last rule is that wave 5 should be between 61.8% of Fibonacci and 123.6% of wave 1. These are the rules that will help you build your Elliott Wave Theory, and also what else I'm using to be a little bit easier for me to see the waves is the zigzag indicator, and you can see it better on our analysis for Bitcoin. And this is our daily chart. And you can see that this is our Elliott Wave Theory and our projection and hypothesis where Bitcoin can actually go from here. Again, we have a little more rules if the price changes, and if it goes below this line over here, probably this won't be our fourth wave, and we have to recalculate everything. But based on the price right now, this is what our analysis would look like. You can see the first wave, you can see the correction part, and you can see the impulsive one, which is the third one and the most important one. You have the correction for the fourth one, which is for now is the fourth one, just because our level here is the support one, and if the price goes below this line over here, probably we have to recalculate our Elliott waves, and we have to see our analysis and recalculate everything again after that. But if this is the correct analysis, we can see Bitcoin to go to 12,000. But again, we have a few more support for this declining trend line. But if Bitcoin manages to break this one, probably it will go to 12,000. Again, if it breaks from this line, which is the 8,000 part, probably we have to calculate our theory and see what went wrong and what we have to do from there. All of this technical analysis here is made by the Fibonacci levels that I actually shared with you in our notepad. And this is why this is our last support here for the price, which is basically that wave 4 should be between range 14.6 or 38.2% of wave 3. So when we make the Fibonacci level, we can say that this is our last support, and if the price breaks down from it, we have to recalculate our wave theory. But one more thing that I want to mention with you guys is when to enter our trade. What I like to do is basically see which should be the first wave, which should be the second wave, based on the Fibonacci levels. And after that, I will try to catch the breakout of the first wave top. And you can see here that basically this is the level that we are looking for. And you can see that our first trade is basically a losing one, but it doesn't matter just because we have a great risk to reward ratio. Also, we are looking for a really high volume breakout so that we can be sure that it won't return again. You can see that we have a small wave over here, which is with the small volume, and this is why we are gonna skip this one and we are gonna take the next one, which is basically, again, high volume day. And you can see that if we add here the price that we actually took, and we put the stop loss, and if we put the stop loss again on the breakout level, which is this one, you can see that our risk to reward ratio is 1 to 6, which is great. And you can see that even though the first trade was a losing one, we managed to make a big win after that. And this is why Elliott Wave Theory is so powerful, and this is why most of the traders are using it, just because it can give you really, really good rewards, but probably you're going to have less profitable trades, and you have to be prepared for that. So this is about it, guys. I hope you liked this video. If do so, just comment, like, and subscribe. And yeah, see you next time. Bye.